The 2026 real estate blueprint: process over big profit. There is a lie circulating in the real estate world right now, and it says that if you just buy enough doors, the cash flow will let you retire on a beach somewhere, right? But the data from the top investors in the world, it shows a different reality for 2026. The middle class of real estate is dying. And if you try to invest like it's 2020, you won't just lose money, you will lose the asset. I have analyzed thousands of hours of advice from the top experts in this industry, from guys managing $100 million portfolios to the data analysts. And today, I'm gonna give you the only strategy that will survive the next cycle. Most people don't mess up their first real estate deal because they buy the wrong property, right? They mess it up because they actually don't know what matters yet, right? They're just getting started. We aren't guessing here. We are synthesizing the non-negotiables from real estate investors who have survived decades of market shifts. The problem is that most advice you see online right now is what I call a lazy comparison. People are looking for 2008 signals in a 2026 economy. And if you're sitting on the sidelines waiting for a crash that looks like the last one in 2008, 2009, you're making a mistake that's gonna cost you thousands. The next 2 years will look nothing like 2008. So you need a blueprint, and it comes down to 3 specific pillars. Pillar number 1 is the boring foundation. You need to reject the get-rich-quick mentality. Real estate works because of process and discipline, not excitement. Boring means predictable, and predictable lets you sleep at night. So what does a boring foundation look like in 2026? It means you need to stop chasing the highest possible return on a spreadsheet and start looking for peace of mind. For buy and hold properties like rentals or commercial real estate, look for future growth areas with a limited amount of certain types of housing or property type. For fix and flips, look in areas that have a low number of rentals and low number of new construction. Nothing will kill your deal faster than a bunch of landlords deciding to sell at once, or new construction homes that will push down the resale price on your flips. Pillar number 2 is what I call the disrespectful offer engine. This is how you win when prices feel too high, and they are still too high. And you cannot control interest rates either. You can't control the national housing market, but you can control your own volume. The money is made in the follow-up, and the money is made in making offers that feel uncomfortable. One no is not the end of the deal. In this market, you need to write 30 offers to get one accepted. Most investors write 3 offers, get rejected, they get their no's, and say the market's impossible. But the market isn't impossible. Your volume is just too low. And when I say volume, I mean offers, the number of offers. You need to make disrespectful offers, but do it respectfully. You tell the seller, this is where my numbers were, and you do it over and over and over again until you nail the right one. Because the goal is not to win the bid. The goal is to be correct on your numbers, because that's how you make money. And if you overpay just to win, you've already lost. Pillar number 3 is the operational fortress. This is where the passive income myth falls apart. Buying is the easy part. Keeping the asset is the hard part. Cash flow is variable. And if you don't have a CapEx fortress built up, one roof replacement or one bad tenant wipes you out. So here's the rule. If you have cash flow from your investment properties, do not live off your cash flow. Build your reserves, your capital expenditures reserves, right? CapEx reserves, or reinvest it. Treat it like a business, not a piggy bank. Because in 2026, the edge isn't finding an undervalued house. Efficient markets, they make that very hard, especially with AI today. The edge is in your operations management. A great operator can make a property a good deal, but a bad operator will bankrupt a great deal. I've seen it over and over in the 17 years that I have been a hard money lender. So what's the payoff? If you follow my advice in 2026, you get control. Don't try to be a genius. Be deliberate. Focus on process and discipline over excitement. And look what's coming. Do your research and take your time. As I always say, quote, the slow dough makes the best bread that will feed you in the long run.